Hello, folks, and welcome back to another edition of Money in Motion. I am your host, CJ, joined with Monte. And yeah, market's down a little bit today. I think the TNX is really just messing everything up. Was talking with Monte a little bit about that before the show, but excited to get into it. Bitcoin's still up on the day, despite the NASDAQ being quite down. So you're starting to see that relative strength still kind of hang on by a thread. But regardless, excited to get to your guys' questions today and talk about a bunch of stuff. But Monte, anything you'd like to start off with?
Yeah, just would like to start by saying what up to everyone in the chat. What's up, Lucas? Good morning. Good morning, Jenna. Good morning, Ryan. I agree. TGIF. You're saying thoughts on next week. I can definitely provide you with my thoughts on next week. Whether or not they'll be correct, that's a different story. Lucas, this actually really caught my eye. For those of you that don't know, Lucas is a very bright guy, and when he speaks, I listen. And he said, "I've been in perma bear for over a year now. Having said that, it's hard to ignore rates increasing and staying high, job growth still strong, and continued bond sell-offs." And I couldn't agree more. CJ, what are your thoughts on that? You mentioned briefly you think that the TNX is kind of screwing this all up. And I agree with you. But what do you think about Lucas's comment? And, do you think that we might see some perma bears shift into bulls if we continue to see this sort of, action in the rates market?
Yeah, I think that is a possibility, but it's just so weird because sentiment always follows price. So we need that little short squeeze ignition, and it hasn't really happened yet. I thought yesterday or today might be the day, but yeah, everything's on sale. It might get even more on sale. We'll see. But the one thing I wanted to bring up in terms of those rates data, I'm sorry, just give me 1 sec. It's piled under a bunch of tabs.
You're good.
Basically, record call buying we're seeing in TLT. Oh, that's not the right one.
And I agree with you, Lucas. Rates stay high, equities will go down. I think it's pretty simple. But I'll talk about that more in my kind of predictions for next week. But CJ, what are you seeing in TLT open interest?
It looks like an altcoin, right? Anyways.
It does.
So if a lot of people are buying, calls, essentially maybe hedging or trying to get exposure in the short term, because this is, I cannot tell you how many times I've heard this is value backed by the United States government. I know, but
but yeah, sometimes
still going down.
Yeah. Yeah, exactly. That doesn't mean a whole lot.
May I say, looking at that call data yesterday in TLT and seeing that people still want to buy bonds, even, and they are buying bonds at these levels, it made me a little bit nervous in terms of the trades, Aussie dollar and Swiss franc, showing some resilience after the open, but down today. We'll get to those in a bit, but
no, it is a little bit of cause for concern, but this, I'm gonna just dive into my analysis for next week. And I think that part of it has to do with what Lucas is talking about in the chat. Ryan asked thoughts on next week, so I'll hit that real quick. And on CNBC, braces for 20% market plunge, delivers recession warning. So much for the soft landing. CNBC. I don't expect that, to be clear. And I think that them saying that means it's probably not going to happen. That being said,
Oh, it's Marko Klonovic,
Klanovich,
Mr.
yeah,
Short at the start of the year, who wrote JP Morgan's. Yeah. Okay.
yeah. No, I don't want to call him out specifically. No need for that, CJ.
Hey,
You,
as
you
Lucas
petty.
or CNBC, whatever.
But listen, okay. So today we're pulling back in equities, and I think we'll see a little bit of continuing pullback consolidation. But the 200-day moving averages, I think, are really important to look at for both equities and for Bitcoin, right? Coming right up against it here in the equity markets, and due for at least a bit of a bounce. And now that everyone is looking down and, like Lucas said, bracing for this 20% plunge, that's when the market starts to go up. So, like Bitcoin got rejected initially from this 200-day moving average, what I could very well see happening is a bounce from this 200-day moving average. And with that, we get some mean reversion in the DXY. I think we're overdue for that mean reversion in the DXY. It looked like we had it coming. We had that defined risk. We talked about that yesterday. But I think that looking at where the moving averages are at, plausibly next week we see dollar pull back, S&P bounce from the 200-day moving average and show signs of strength, because when everyone's looking down, like I said, the market tends to go up, and when everyone is looking down, or when everyone's looking up, the market tends to go down. So I think in this instance, when we're heading towards the 200-day moving average, we could definitely see a bounce next week, see some positive price action. And one thing I'd like to point out as well, sentiment for Bitcoin very bearish. People are shorting Bitcoin, and that's evident from the funding rate as well, increasing as the day goes on. Now up to 0.0043%. Nothing that significant, but still significant in the sense that it tells us that people are bearish on Bitcoin right now. So this is the situation I'm going to lay out here, right? We get a bounce off the 200-day moving average next week in the S&P. The dollar pulls back, does a bit of mean reversion. Bitcoin, because of the bearish sentiment and because of the fact that people are thinking that, we're going to get rejected from the 200-day moving average, actually sees positive price action as shorts are forced to cover on the back of this equities rally. So I could see Bitcoin breaking above the 200-day moving average, making a run towards 30K next week on the back of positive price action in the equity markets and weakness in the dollar. That's kind of the thesis that I'm laying out for next week, I think. And a lot of it has to do with the 200-day moving average, but also it has to do with the fact that when you look at this sentiment, I mean, it is very bearish. I think that's a bit extreme given where we're at in current price. I mean, Bitcoin, not looking that bad, all things considered. I think it could definitely break above that 200-day moving average if we have positive price action in the equity markets next week. But CJ, would love to get your thoughts on any of that. And yeah, Lucas, shame on you for quoting CNBC, but no.
It's just that, like, I don't mean to call anybody out, and like the same skepticism I hold for myself equally. It's just that, like, anyone can say something and be right 10 times, but the 11th time it's likely going to be 50-50 in many regards, at least in terms of markets. And that all goes back to the idea of what you said: when everybody's looking up, things tend to go the other way.
Yeah.
But anyways, just one thing that I will add is like kind of a risk management thing that I'll like to do from time to time. Like you see on Australian dollar, and for instance, same with Swiss franc, but to a lesser degree, we are starting to see a little bit of buying coming in. So, typically if this was the open, which it was, and the open is going to create the low of the day, then, as opposed to having my stop here, I could raise it here and decrease risk of the position. And, it's all about like personal preference and trading style. But I do believe, like, if you're to go buy it and just assume the idea where it's like you're talking about the market turn by definition, a market only turns once in this particular case. So therefore, if price goes below the turn, then I was wrong about this being the turn of the market, and I have to stop myself out temporarily. And so, I think arguably that same idea could apply to today's low. So, if I was entering this position today, which I probably wouldn't be since it's red, but let's just say I was for argument's sake, that's a decent place to put the stop as well. Not a huge thing, but just a little small risk management thing from time to time.
Yeah. And with those positions, one thing that's going to be really important, and we touched on this yesterday, will be the COT data that comes out today. It's going to be interesting to see if people are still max short things like the Swiss franc. That will definitely influence my positioning because I am still long the Swiss franc. Basically, the only positions I'm in, to be clear, is long Bitcoin, long Swiss franc, short ZL. And then what was the third one or fourth one, CJ? I feel like you know my positions better than I do. I think
NRGD.
NRGD. Thank you, NRGD. Yeah, sorry. NRGD. I am still in that position. I did say in the Discord I took 1/3 off it, but I think NRGD. I still think that that's a good play. And today even might be a good day to buy. Let's take a look at this chart. So yesterday pulled back a little bit. We had this kind of hammer candle top of the uptrend after what was a very positive move. But today we're seeing it come back, and I would not at all be surprised to see it make a move back up to the moving average. That was my target in the insight that was published, and I think that this is a very feasible target for NRGD in the long term. Of course, this is the 3x inverse levered ETF.
Can I ask you a question?
Yeah.
So from a technical analysis perspective, should we be looking at this? Should we be looking at XLE or should we be looking at NRGD? Because do you think the 3x leverage somehow will distorts kind of the underlying or the appearance of the underlying? You know what I mean? Because we're right at a moving average at this particular asset, which we wouldn't be on the other exponential one.
Yes. What I think you'd be 100% doing yourself a disservice. I think you'd be irresponsibly trading if you are entering NRGD without first looking at XLE. This is the underlying, right? So you need to understand where it's at from a technical perspective. And you're right. We should start with XLE because it is breaking down below the 200-day moving average. Again, the 200-day moving average, I feel like I've said that like 50 times this episode, but so many assets are right at that inflection point, and it's a really important level for a lot of reasons. And our XLE breaking down below this level, I think, is very important. Yesterday, there was some hope here, and I saw it on CNBC. I saw it on Twitter. People saying XLE going to bounce from the 200-day moving average. Didn't happen. Now, maybe the same thing happens with my prediction for the S&P, but I have some pretty high conviction that we see a bounce at least on Monday and Tuesday of next week. But I'm first curious to see the positioning. But getting back to XLE, we're breaking down below this level, and with that gives me the conviction needed to enter an NRGD trade. If I was completely flat NRGD, if I didn't get in, like earlier in the week, when we were talking about it on Monday, I think today is a good day to enter because we're breaking below a critical level. You have defined risk being basically out to the top of today's candle, right? Like 85. I would move it up a little bit to the top of the wick if you're not going to use any leverage, or even if you're just going to use maybe if you're going to use like 1% to 2% leverage, like I did my NRGD trade, or the NRGD trade is 3x levered. If you're going to short XLE with any leverage, then consider the fact that this is maybe a level where I consider stopping myself out is $86, because that would be that would be a bullish engulfing candle. a bounce from the 200-day. And now that we are moving down, I feel like a lot of people will be looking down. But yesterday, a lot of people were looking up. So I think that if you are flat energy, you have no exposure to energy, oil, any of that, I think XLE breaking down is a good play. But the best way I think to get exposure to it is still through NRGD, the 3x inverse levered ETF. I think that having the target of the 200-day moving average of 305 is a nice target to hit. And again, with this one, use XLE as the guide for the technicals and where to stop yourself out and when to stop yourself out. But in terms of like a price target for NRGD itself, I think that 305, this range here, is a definite target that could be hit quicker than a lot of people may be expecting. So I am still in that position. I did take a little bit off yesterday, but that being said, I think today is a definitely, it's hitting all the boxes for trigger for entry. You have defined risk, breaking through a critical level, the 200-day moving average. And I think that the levered ETF is widely diverged from its moving average. So all three of those things are indications that we may see some positive price action there. But do you have any thoughts on energy? I know you've been trading oil or keeping an eye on it at the very least all throughout the last couple of weeks, and same with XLE and everything else.
Yeah, my positions were crude oil futures and then heating oil. And I just had those shorts earlier in the week, and I'm out of them now fully. Probably sold or exited too soon, but I like to do that in many cases. What was the other thing? I'd keep an eye on gold too. Maybe not to buy, but just kind of as a bastion of risk if it closes up today. Ironically, outperforming, I think, my currency pairs I put on yesterday. So.
Yeah, well, pretty much everything is. I'm in that same situation with my Swiss franc pair.
Yeah.
What about the crypto related equities, CJ? Any thoughts on those as we wrap up the week here? Coinbase down about 0.5%. Miners are up, but they were beat up very bad. Any thoughts on those as we enter the weekend?
Let me bring up the coin BTC chart for just a moment, and then maybe we'll do the same with some other crypto equities. But I just want to see the relative performance, because I think now what we've begun to see is actually the opposite of what I talked about in the start of the year, which is the fact that the NASDAQ would hold up some of these crypto equities while crypto wasn't really doing that much and was actually going down. MSN, I believe, is mainstream media. But yeah, like this is clearly a result of the underperformance of coin is clearly a result in my mind of the underperformance of the NASDAQ and what we've seen that in terms of Bitcoin lately. So I think that you need to see a lot more recovery and like an increase in stock prices. Crypto, I mean, it's kind of trading in its own bubble, but I still think it's heavily impacted. It's clearly heavily impacted by, equities. Now, I think something that's fortunate for the bulls and something I shared in our community a few days ago. Well, that one's 1 point. Massive, rampant fear. Where's the equity put? Oh, I put it in the wrong channel. I put it in the crypto channel. Okay, here we go. So basically, if you look at these numbers down on the bottom left, after we hit this 1.5 level in the put call ratio, average going back to 1995, in the 1 month following, stock prices are up, where the EOS is up 1.5%. After 3 months, on average, it averages 6% gains, and the NASDAQ does 9%. So, protect yourself. I don't like to tell people what to do with their money or anything, but what I will say, that is financial advice. Be careful. There's no need to, even though this data makes me really bullish. Can't get blown up in the short term. Have to manage risk properly. Ideas mean nothing if risk is not managed properly over time.
100%. I said it yesterday and I'll say it again. A good trader is not someone that, buys the lows and sells the highs. It's someone that manages risk appropriately, knows what to do when they're in the trade. And I think that that's kind of going to be the tune of next week. Like if we do get a reversal in the S&P, there's no need to catch the absolute bottom. Wait for a reversal, wait for more signs of clarity, and ride the trend up. That's definitely a possible scenario, I think, for next week. But
oh yeah, I was just gonna say, nothing just makes me laugh more when traders or analysts who are trying to beef themselves up or make them get popular. They're like, oh, yep, in 2000, I was there. I called the top. In 2008, I was there. No one fucking cares. How much money did you make? Can we see your brokerage account statements? All right. Anyways, I'm sorry. I'm sorry for the profanity. But
no, you're spot on. If you didn't make any money, nobody gives a shit. You may as well be, just yelling into the void, which is sometimes how I feel. But
I do that anyways. So
yeah, it's good therapy. It's good therapy. But anyways, I think we'll have a lot more clarity on Monday in terms of these pairs like the Swiss franc and the Aussie dollar and the New Zealand dollar. Once we get some of that COT data, I'll be curious to see if the retail traders are still shorting those things, or if they're not. It'll be interesting to see. So as always, look out for CJ's futures report on Sunday. That's available to our members of our community. And if you want to become a member of our community, you can do so at tradethechain.com. You can get a 14-day free trial, absolutely free for 14 days. That gets you access to the sentiment dashboard where you can see what's hot, what's not, what people are talking about on Twitter. It also gets you access to our Discord community with traders from all around the world. Some really bright minds, people like Lucas, and then also myself, CJ, Nick, Alex, providing insights in there all the time. We'll be in there this weekend. So if you have any questions over the weekend about any crypto or any crypto related equities or anything that you want to prepare for next week, we are always there. And also, please don't forget to like and subscribe because it really helps out our channel. But that's all we got for today. Have a wonderful rest of your day. Thank you guys for all the comments and participation. We truly appreciate it. It makes the show a lot of fun. Have a great rest of your day and have a wonderful weekend. We'll see you on